In a surprising turn of events, the U.S. economy has recently exhibited both resilience and vulnerability. On one hand, durable goods orders have continued to rise, showcasing a robust demand, particularly in the transportation sector. On the other hand, consumer sentiment has plummeted to a 5-month low, largely driven by concerns over employment stability and inflation. This dichotomy reflects a complex economic landscape, where positive indicators are tempered by underlying anxieties among consumers. The latest data reveals a notable drop in the Michigan Index of Consumer Sentiment, signaling growing apprehension about the labor market and future income growth. Despite these concerns, the overall sentiment remains higher than it was a year ago, indicating some level of recovery from the peaks of inflationary pressure. As durable goods orders, especially in transportation, defy expectations by climbing for the third consecutive month, it begs the question, how will these mixed signals shape the future trajectory of the U.S. economy? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button, leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. A tale of two indicators, navigating the U.S. economic landscape. In today's rapidly evolving economic environment, keeping a pulse on the latest data is crucial for understanding how the shifting landscape impacts both businesses and consumers. On one hand, there are signs of economic strength, as evidenced by a rise in durable goods orders. On the other hand, there is a growing sense of unease among consumers, with sentiment hitting a 5-month low. Let's delve deeper into these developments to understand what they mean for the U.S. economy. Consumer sentiment plummets amid labor and inflation concerns. Recent data released on Friday highlighted a significant drop in consumer sentiment, with the Michigan Index of Consumer Sentiment falling to 69.1 in May. This represents a 10.5% decrease from April, marking the lowest reading in nearly 5 months. The decline is primarily driven by consumers' growing concerns about job security and persistent inflation. Joanne Husu, the survey director, noted that the sentiment has been relatively stagnant throughout the year, but took a noticeable downturn recently. Consumers expressed heightened anxiety about the labor market, fearing potential rises in unemployment and slower income growth. These worries are not unfounded, as the labor market's instability can significantly impact consumer spending, a critical driver of economic growth. Despite the recent drop, it's worth noting that consumer sentiment is still 20% higher than it was a year ago, during the peak of inflationary pressures in June 2022. This indicates some resilience and recovery, but the current sentiment reflects multiple downside risks to consumer spending. Moreover, inflation expectations among consumers have continued to climb. The survey indicated that consumers expect prices to rise by 3.3% over the coming year, higher than last month's expectations and above the pre-pandemic range. This persistent expectation of rising prices is closely monitored by Federal Reserve officials as it can influence actual inflation trends. Durable goods orders, a beacon of economic strength. Contrary to the drop in consumer sentiment, new orders for durable goods have shown unexpected strength. In April, durable goods orders rose by 0.7%, marking the third consecutive month of increases. This uptick, driven primarily by a surge in aircraft orders, caught economists by surprise, who had forecasted a decline. The transportation equipment sector, which includes aircraft, saw orders increase by $1.1 billion. Even when excluding transportation, durable goods orders still increased by 0.4%, indicating broad-based demand. These figures are significant because durable goods orders are often used as a gauge of business investment and economic health. The latest data exceeded expectations, with economists predicting a 0.5% decline, but witnessing a solid performance instead. Bernard Yaros, the lead economist at Oxford Economics, highlighted that core capital goods orders, which exclude aircraft and defense, surpassed expectations and reversed the previous month's decline. This suggests a robust underlying trend in capital spending, which could signal stronger than anticipated economic growth. Additionally, motor vehicles and parts orders rose for the sixth consecutive month. Sal Guattieri, a senior economist at BMO Capital Markets, noted that this persistent increase in durable goods orders points to potential strength in the gross domestic product (GDP) growth for the second quarter. Despite high borrowing costs and stricter loan standards, U.S. business investment appears poised to pick up. Balancing act, navigating economic signals. The juxtaposition of rising durable goods orders against falling consumer sentiment presents a complex picture. On one side, strong business investment and demand for durable goods, particularly in the transportation sector, suggest an underlying economic resilience. On the other side, consumer fears about job security and inflation reflect significant headwinds. This dichotomy raises important questions about the future trajectory of the U.S. economy. High borrowing costs and stricter loan standards could dampen the manufacturing sector's growth until interest rates ease, the U.S. dollar weakens, and the global economy strengthens. However, the current strength in durable goods orders indicates that businesses are still willing to invest, which could buffer the economy against some of these challenges. Implications for consumers and businesses. For consumers, the drop in sentiment could translate to more cautious spending behaviors, particularly if fears about unemployment and inflation materialize. Reduced consumer spending could slow down economic growth, creating a feedback loop that further dampens sentiment. Businesses might need to navigate this cautious consumer environment by adjusting their strategies, perhaps focusing on cost efficiencies and targeted marketing to maintain demand. For businesses, the rise in durable goods orders is a positive sign, suggesting that investment in capital goods remains robust. This could lead to increased production capacities and potential growth in various sectors. However, businesses must also remain vigilant about the broader economic uncertainties, including potential changes in interest rates and global economic conditions. Looking ahead, a time of uncertainty and opportunity. As the U.S. economy navigates these mixed signals, it remains crucial for policymakers, businesses, and consumers to stay informed and adaptive. The Federal Reserve's decisions on interest rates will play a significant role in shaping the economic landscape. If inflation expectations continue to rise, the Fed may need to implement measures to curb inflation, which could impact borrowing costs and investment decisions. Consumers and businesses alike must prepare for a period of uncertainty. For consumers, this might mean saving more and spending cautiously, while for businesses, it could involve strategic investments and cost management. The ongoing monitoring of economic indicators, such as consumer sentiment and durable goods orders, will be essential in making informed decisions. Shaping the future of the U.S. economy. The contrasting trends in consumer sentiment and durable goods orders paint a picture of an economy at a crossroads. While strong durable goods orders suggest robust business investment and potential economic growth, declining consumer sentiment highlights significant concerns about employment and inflation. This dynamic creates a challenging environment where optimism about economic strength is tempered by underlying anxieties. As we move forward, it is essential to consider how these mixed signals will influence the broader economic landscape. Will the strength in durable goods orders be enough to offset the potential slowdown in consumer spending? How will businesses adapt to the evolving economic conditions, and what strategies will they employ to navigate this period of uncertainty? Most importantly, how will consumers balance their concerns with the realities of the economic environment? Your perspective matters in this complex economic scenario. How do you think the interplay between consumer sentiment and durable goods orders will shape the future of the U.S. economy? Share your thoughts and insights on this critical topic. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.